the $450 billion target. Roughly 6.9 million Bitcoin are currently visible to a mathematical sniper that did not exist when Satoshi Nakamoto wrote the white paper. While the market obsesses over ETF inflows and hash rate peaks, Citigroup's May 2026 risk report just put a $450 billion target on legacy addresses. This isn't just theory anymore. Google's recent spooky pebbling breakthrough has officially compressed the timeline for cracking elliptic curve cryptography by nearly 40%. The myth of Bitcoin's impenetrable vault is meeting the reality of Shor's algorithm, and the math suggests the lock is already picking itself. And the reason your modern wallet might be less safe than you think comes down to a 9-minute window in the mempool. The 9-minute race. Google Quantum A. I just revealed a circuit optimization that reduces the logical qubits needed to break Bitcoin from 2000 down to exactly 1193. This mechanism uses measurement-based uncomputation to ghost intermediate results, effectively wall-hacking the math that secures every transaction you sign. But the terrifying metric is the clock speed. We are now looking at a 9-minute Shor run. Because Bitcoin averages a 10-minute block time, a quantum attacker can intercept a transaction in the mempool, derive the private key, and front-run the original owner before the next block even settles. This transforms every transaction into a race against a computer that thinks at light speed. But the most immediate casualties won't be new transactions. They are the 7 million coins that have been lying dormant for a decade. The Harvest Now Decrypt Later threat. Citigroup's analysis highlights that 6.9 million Bitcoin have their public keys permanently exposed on the public ledger right now. In the early Satoshi era, Bitcoin used pay-to-public key outputs that left the security of the coins dangling in plain sight. These include the 1.1 million coins held by Satoshi Nakamoto. For these legacy addresses, the threat isn't future, it is current. Advanced actors are already engaging in Harvest Now Decrypt Later tactics, scraping the blockchain to store these exposed keys until the hardware matures. If your funds are sitting in an address created before 2010, or if you have reused an address even once, you have essentially handed a future thief the map to your safe. The solution requires a total overhaul of Bitcoin's core, and that is where the protocol's greatest strength becomes its fatal flaw: the signature ossification crisis. Bitcoin's signature ossification means changing the base layer is a political nightmare. Developers have proposed BIP 361 to force a migration to quantum-resistant algorithms like dilithium. But the plan involves a controversial sunset clause. It would effectively freeze any Bitcoin that has not migrated to a new address type by a specific deadline. This creates a fundamental crisis of faith. If the network can invalidate your coins because you did not upgrade, is it still immutable? On-chain data shows the community is split, with purists arguing that a mandatory freeze is a worse fate than a quantum hack. This governance paralysis is exactly why Citi labels Bitcoin as more vulnerable than Ethereum's more agile yet complex proof-of-stake structure. The signal under the noise. The Citigroup warning transforms the quantum threat from a distant science fiction scenario into a looming governance stress test for the entire network. While the technical realities of spooky pebbling and exposed public keys prove the physical vault is no longer airtight, the real danger is the social consensus required to fix it. We are watching the collision of two core Bitcoin tenets: the absolute immutability of the ledger versus the mathematical survival of the assets. If BIP 361 passes, Bitcoin sacrifices its promise of never changing rules to save the coins. If it fails, a significant portion of the supply, including Satoshi's own holdings, becomes a prize for the first nation-state to achieve quantum supremacy. For investors and operators, the signal is clear. The era of set-it-and-forget-it cold storage is ending. You can no longer rely on the static nature of the protocol to protect you from the dynamic acceleration of compute power. Watch the activation status of BIP 360 in the coming months. It is the definitive canary in the coal mine for whether Bitcoin can evolve fast enough to outrun its own math. Subscribe for more.